What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we're going to talk about the Bitcoin action and try to see if this chart can tell us when we're going to get out of this stupid side banding. Are we going to go up? Are we going to go down? When is the breakout going to be? Is this a bear market? Has the bear market started already, or is it going to be a bear market all year? Did we have a blow off top in October, or is there going to be a completely new cycle that doesn't look like the 4-year cycle where we just blow off to the moon? And when? I'm going to answer all of that. And then I'm going to show you the evidence for all of these different predictions and let you decide, and you'll be able to tell, even though I won't tell you exactly what my opinion is. I'm going to present the facts and let you decide. We're going to start on the chart, and then we're going to jump to the facts. So first, with the chart, here we are on this lovely, crazy, crackhead BTC chart sitting at 92,754. And we just seem to be going up and down in this side banding move. So on the 1-day chart, it looks like we've got a bullish crossover coming, but all of this I'm not paying much attention to because what did we have right here? This was a bearish cross. Do you see that? And then the blue line does what? After looking like it was going to cross over the orange, it unfurls and jumps up, but just touches the 80 line, and then we go back down. We didn't even get up into the oversold territory above the 80 line. Now, what is it doing? Well, we got another little crossover right here, but is this going to hold? I don't know. So whenever the blue line crosses over that orange, that means we go up. But notice this wick on top of the current candle. We wicked out right at the baseline at 92,700 of this support and resistance zone. So are we sure we're going to close above this baseline? And is this where we go up? I don't know. Not enough evidence to tell. And then as we go down through the lower charts, it's going to be even more confusing. Let's look at the 4-hour chart. So on the 4-hour, we went up. We come back down. We go up. It's curling. It's coming back down. So all of this is just mind-boggling side banding. Look at this. Going down, coming up. Going down, coming up, going down, coming up, going down, coming up, and going down again. So all of this time period here, this is just nothing but boring action. No major, massive breakouts, right? I mean, what we're really wanting to know is when is it going to explode to the upside? Or conversely, when is it going to completely dive bomb and go down south downstairs and hit that 75K? Well, we're not getting an answer yet. Now let's just pull it back to the 1 hour, and you can see we got a bearish cross. So all we're doing is just hovering around the point of control price around this big volume node at 91,400. Up and down, up and down. That's it. That's it. So going back to the 1-day chart, we do look like we're crossing over here, but we did get a wick above the current candle, which says momentum is already coming back down. So that means I'm not popping the champagne cork thinking, oh, this is where we blow off, blast off out of here, because the momentum is downward. See, you can't let these things fool you. Look downstairs on the MACD. Solid green on the histogram, then light green, then a little solid green. That's going to flip to a light green. And then we see an overall trend. Look at the overall trend on the oscillators here, where we start up here, and then it's just wobbling down, little bump up, wobbling down, little bump up. It's probably going to wobble down some more. Okay, so I don't know what's going to happen. Are we going to be able to dip and finally hit that 75,000? Or are we going to get stuck right here at this 90,000 and then move up? I don't know. Let's look at the 1-week chart, and then I'll let you decide that. Oh, and I'll end it on the 1 month, and then I'm going to show you the evidence. The evidence, fundamental analysis. So here it is, right here. What do we see on this amazing 1-week chart? Look at that right there. Stochastic crossover after we touch down into the oversold zone. Now, one reason why I kind of lean against the whole bull market peak was in October thing? All right, the stochastic peak is in July, guys. Look at this much lower stochastic peak. That was in September. Do you see a stochastic peak in October? No, you do not. All you see is price coming down. So that 4-year cycle, what are we supposed to think about that? And you know what I always teach? Watch the peak and then the corresponding price. All right? Lower peak here, corresponding price was our bull market peak last bull run. Now look at this. Peak, peak, right? Peak, higher peak, right? And then you still got a peak, even though it was a divergent peak, all-time high right there, okay? Now look at this. Crossover, and what does that correspond with? This potential low, the 80,000. Is the 80,000 the bottom? No. Look down here. What do you see? Massive move up, lesser move up. We're down below the zero line. Could we be coming back to the zero line? You see the solid red right there? And what do? Change to light red. What does that mean? Momentum's coming up towards the zero line. That's interesting. So regardless of whether or not this is a 4-year cycle, blow off top, done in October, bomb, bear market type of thing, let me erase all this so we can see what the heck we're looking at. It doesn't matter. What's the biggest, most important piece of information on this chart that you're looking at? There it is, right there. Okay? What do I always say? Buy when the stochastic is here, sell when the stochastic is up there. Buy when it's down here, sell when it's up there. Buy when it's down here, sell when it's up there. Now, could you tell me when you would have lost money if you would just abide by that rule right here? Buy down here, sold up there. Bought down here, sold up there. Bought down here, sold up there. So what do we have here? We're below the zero line. Okay? There's a low there. What does that tell you? You decide. I'm not going to tell you the answer because this isn't financial advice. Let me put the 1-month chart up there, and then we're going to be done with this because the 1-month chart, this one's left up to you to decide. What does this mean? There's some conflicting information on this chart. So if you got really excited on the last one, this might calm you down. So way back here, 2022, there's the peak right there. Then here's the bear market. Here's a peak. There's a crossover. Uh-oh. Look at those red bars on the histogram. That's interesting. Look at this. Peak, dive. Now, the one positive thing could be, is the bear market over? Are we already at the bottom and then going to do this? I don't know. Look at this. We went upstairs into the above the 80 line 3 times. 1, 2, 3. Wow. Could there be a fourth? That is the question. Now, to answer that, we're going to go to fundamental analysis. Yes, that's right. Now, where's the studio? Oh, there it is. Okay, let's jump back into the studio. Fundamental analysis time. Now, I'm going to read my notes. You listen to what I have to say, and then you decide. Okay, so we're going to talk about the 4-year cycle ended. This is a bear market. The core thesis around that is post-halving exhaustion, liquidity cooling off, and the shift is going to the risk-off investments. Okay, the primary driver of that theory is profit-taking, slower inflows, macro shocks. What about the market structure implications? Well, we got higher volatility, deeper drawdowns, alts retracing all the way back down. Well, how about the other scenario? The maturing market cycle scenario with the longer cycles where we're maybe turning into the stock market with a 13-year cycle. Well, the core thesis of that is you have institutional rails now from the government, plus policy clarity, and, of course, the extended cycle. What's the primary driver? Well, we got that CFTC Regulated spot trading now. We got easing on the quantitative policy. We got lower rates coming. How about the market structure implications? Well, we got longer expansions, shallower dips, diversified bid, ETFs, onshore venues. That means in the United States instead of how the Biden administration ran everything out of the United States and only left us with what? Coinbase and Gemini and Kraken. Okay, so bearish factors, and then I'm going to give you the bullish catalysts. So bearish factors to weigh. Put all this stuff on a scale. You weigh it, you decide. So post-halving, reflex, and profit taking. Historically, halving cycles catalyze strong rallies followed by cooling. If liquidity doesn't expand, reflexive downside risk will grow. 2. Macro shocks, a stickier inflation print or funding stress could tighten financial conditions, reviving risk-off behavior despite crypto-specific tailwinds. Number 3, regulatory setbacks. Any adverse enforcement or delays in institutional participation could mute the onshore liquidity thesis. In other words, QE coming, right? All right. Let's talk about the bullish maturation catalysts. And then you throw all of these on the other side of the scale, and then you tell me which way we tip. First one, CTFC, approval of spot crypto trading. Now, what changed with this? Well, the CTFC clears the path for federally regulated spot Bitcoin and other cryptos trading on CFTC registered exchanges, with Bitnomial cited as an early venue under the new framework. That comes from Bitcoin Magazine. Here's why it's positive for U.S. investors. Well, onshore, federally regulated venues. This improves custody standards, where they take custody of your coins and keep it on the exchange, and you don't have as big of a risk of the exchange going down and you lose it. Surveillance, consumer protections. So this all goes into reducing counterparty and market structure risk that previously pushed all of these exchanges offshore. Okay. Institutional access and liquidity. The CFTC oversight gives BTC gold-like legitimacy that's historically linked to deeper liquidity and broader participation. Think big institutions. Lowering volatility over time. So that means, the big straight ups and then dipping down 95%. Well, that's going to smooth out. Remember what I was saying about the maturing market where we look like the stock market chart. Unified market plumbing. Not the plumbing in your house that carries the water. Some venues aim for integrated spot, perps, futures, and options. That would be cool, with portfolio margining, potentially improving capital efficiency for professional traders. What does that mean? All of the pro traders that do all of the options and the futures, margin trading, all that crap, okay? That means that they don't have to just do that on the stock market. They can bring that market volume over to crypto. That means more volume. That means price go up, more participation. Do you get that? All right. Monetary policy tailwinds. We have the end of quantitative tightening and the potential pivot to QE, quantitative easing. All right. This is more stuff to put on the other side of the scale. The Fed has signaled the end of balance sheet reduction at the start of December 2025. Yes, sir. A liquidity-friendly shift that historically supports risk assets, including cryptocurrency, leadership, and rates outlook. Now, market chatter, all the chatter out there behind the scenes, points to a potentially more dovish Fed chair shortlist. In other words, the people who are on that short list that Trump is going to pick to head the Fed, they're all dovish, which means they are going to favor rate cuts in 2026, all right, which is going to make the market heat up, okay? So lower discount rates, improving the bid for duration, and tech-like assets such as crypto. That comes from CNBC.com. All right. Strategic reserves and government flows. This is another big one that you're going to put on that side of the scale. The Federal Strategic Bitcoin Reserve Framework. Sounds fancy, doesn't it? An executive order created a strategic Bitcoin reserve funded by seized BTC. That, you remember the whole, what was it, Silk Road or whatever? So they took that seized BTC and they made a strategic reserve out of it. And that formalizes retention over liquidation. That means we're going to keep it instead of selling it out on the market on the exchanges. So that's a policy signal, even if near-term net buying isn't mandated. We still are positive because we're keeping the Silk Road pile. Biden was going to put that on the market and sell it, and that would have been an automatic market dump, okay? Throw that on this side of the scale. All right, state level accumulation. States, the state of Texas, the great state of Texas, where my daughter lives, became the first state, the first U.S. state to buy Bitcoin for a strategic reserve via a spot ETF. That's cool. Signaling public treasury demand channels emerging, albeit small in size today. That comes from Crypto Briefing. That could start a trend, all right? Throw that on the scale. How about this? Global adoption backdrop. Countries and institutions continue exploring accumulation or supportive regulation, contributing to diversified demand over time, okay? So let's wrap all this up. How does it all stack up? So you got the liquidity and the policy. You got ending QT and the prospects of rate cuts, QE coming. That's on the bullish side, all right? Market structure. CFTC regulated spot markets are a structural upgrade, and that will compound liquidity and participation. So that's another big bullish weight. Official reserve signals federal policy to retain the seized BTC from Silk Road, plus Texas buying BTC. All right. So that adds to this weight of the scale, positive. Cycle reflex. So post-halving cooling and profit taking are real and near term, but they're lighter versus structural and macro liquidity tailwinds, unless macro shocks flip the regime. And, you never know. We could have some big black swan thing that shocks, the market. We don't know. But 9 times out of 10, well, exactly 10 times out of 10, whenever there's a black swan event, we have a V-shaped bottom and we recover right away. Now, what's your decision? What did you add up? Do you think it's really a big deal that we're in a bear market right now? If we had a blow off top in October, which there wasn't one, because the stochastic, we never had a peak in October. But even if there was, do you think it's that serious of a deal? Do you think 2026 is going to go way down the tubes? What do you think the bottom is? We've talked about 75. We've heard people say 50 and even 15. What do you think? Based on what I just told you, what do you think? Add it all up, weigh it all up. And then for the real ones who made it to the end, who are very serious about their crypto investing, who needed all of this information so they could properly weigh the situation, I want you to say, post in the comments, Bitcoin for the gold. Bitcoin for the gold. And nobody else is going to know what you mean when you post that because they didn't listen to the whole video. Then I'll know who the real ones are. I will know who the real ones are. So that's all for this one. You better like, comment, subscribe, do all that good stuff. I'll have more videos coming your way. I'm going to make time this week to hopefully bring you some swing trade flip opportunities, as there are a few out there. And then actually I'm going to be talking VV, guys. The VV market is actually heating up. I can't believe I'm saying that. So that's coming up very soon. That's all I got for this one. It's Carlton, and I'm out. Dadgummit. Let me try that again. This is Carlton, and I'm out.